What's up, guys? It's Dan from Coin Bureau Trading. Today I'm going to explain why September is likely to be bullish for the crypto market. If this is the kind of content that you enjoy, then be sure to smash that like button, subscribe to the channel, and ping that notification bell. Before we get started, do keep in mind that nothing in this video is financial advice. It's just my personal analysis of the crypto market. Your analysis could be different, and if it is, that's awesome, because the more difference of opinion that we have, the better traders and the better investors we're all going to become. So first things first, guys, as I'm sure you've all heard, and as you all probably know, September, seasonally speaking, is a pretty bearish month for the crypto market, with Bitcoin seeing a average drawdown of somewhere around 4%, which in my opinion is not that big. But all of that aside, everyone has been talking about how September is going to be super bearish. And what's really funny is, of course, with the recent kind of drawdown earlier this week, everyone is saying, "Oh my God!" And now you're telling me that September is going to be even worse. Like this sucks. Like it's over. Like I'm sick of this. Like it's just going to get worse and worse. But there's kind of two interesting things there. I guess the first, guys, is that the kind of sentiment that we see going into September is actually pretty similar to what we saw going into last Friday, right? You'll remember that everyone was kind of bearish and short going into the Fed meeting, into the Jackson Hole speech from Jerome Powell. And then, of course, he was a little bit more dovish than expected, and then everything powered higher. I actually think we're going to see a similar dynamic here with everyone kind of going into September being super bearish. You could make the argument that this is why prices have been kind of chopping and grinding this whole week, is because we're seeing like the same kind of phenomenon that everyone expects September to be horrible. So they've all kind of been like selling and whatever, like in advance of this, thinking like, oh my God, it's going to go lower in September, so I'm going to get out now before it gets worse, right? And in my mind, that kind of sets the stage for something similar again to what we saw last Friday, except instead of having just one day of that, you have basically a whole month of that, right? But all of that aside, which you could just say is like speculation or whatever, the thing that is interesting to me, guys, is that historically speaking, from a seasonal perspective, August tends to be bullish for Bitcoin in post-halving years. But as you guys might have noticed, like looking at Bitcoin here on the monthly chart, it actually looks like Bitcoin is going to be closing the month in the red. So in this sense, you could make the argument that we're going to see seasonality violated this month already, right? And this is part of why I'm kind of like leaning towards, okay, well then maybe September could be bullish, because if this month didn't play out as people were expecting, which again, historically speaking, bullish in post-halving years, if that didn't play out, then logically, it's possible that we could see kind of like the same kind of inverse, the opposite scenario in September. And not only that, guys, but from a technical perspective, when you have like this, like rally up here for the last few months, like basically Bitcoin has been in the green for the last, rallying for the last 4 or 5 months, basically straight, it's going straight up basically since April, having this kind of pause, this pullback in August to basically prepare for that final move into the cycle top, I think makes perfect sense, again, from a technical perspective. Just like if you stop for a second and forget about all the seasonality and everything and just look at the chart, what you'd be looking at here is a nice big run up, a slight pullback, and then basically a preparation for another massive move higher, which would take us to the cycle top, which I believe is going to be sometime later in September for Bitcoin. So this is kind of just from the Bitcoin perspective, because again, everything that I just said, you could say, well, none of what you said matters, because the September effect, as it's called, is a seasonal thing that it doesn't just apply to crypto, but it applies to the markets in general. So even if everything I just said here about how investors are worried that Bitcoin is going to crash, so they're selling now, and it sets the stage for a rally in September, all these dynamics that I just noted about, like, Bitcoin having a red monthly candle in August, setting the stage for a green one in September, you guys might think, okay, well, that all makes sense. But then how can you explain then, like, how do you dispel the September effect when it comes to all these other asset classes? Because of course, if the September effect is going to affect stocks as well, then that would take down the crypto market as well, right? Logically. So we couldn't really have a scenario where, stocks and everything is crashing, but then crypto is rallying. That just seems pretty unlikely. So this is where things get really interesting, guys. Like, to understand why September is seasonally bad, we really have to, and this is like, it's actually as a fun fact, guys, when a lot of people say, like, because of this indicator, because of this historical seasonality, whatever, and they just say because of that, then therefore this will happen, but they don't really look into the details and they don't try and understand why these dynamics occur. So when it comes to the September effect, it's widely believed that the reason why it happens is because you have basically institutional investors coming back after summer, like they're away for whatever it is, July or August. They come back in September and they start like selling off positions. It has to do with, some people argue it has to do with like showing profits to their clients, or just because they want to rebalance their portfolios, because of course they were away for the whole summer, right? They come back and they're like, wait a minute, like my portfolio is looking a little bit different now. I need to like sell a little bit here, buy a little bit here. And typically the selling involves selling like the top performing assets, which basically results in the market going down. Again, there's many different possible explanations here. The key takeaway being is that the reason why there's this September effect and why September tends to be bearish for the markets, not just for crypto, but for the markets as a whole, is because because of institutional involvement and institutional positioning. But here's where things are really interesting, guys. As you might have heard, and this is where things get even more nuanced. As you guys might have heard, like the rally, especially since April, has been driven primarily by retail investors, and there's a whole bunch of different, whether it's in stocks or in crypto for that matter. And you guys can actually see this using a whole bunch of different indicators. Here, I took one from Lance Roberts, who's this awesome investor slash trader. He's on Adam Taggart's channel if you guys are familiar with him. And it was really interesting to see that he shared this chart, and this is showing ETF flows. And you can see that this light blue line here, guys, this is ETF flows from retail, and then this dark blue line on the bottom here is ETF flows from institutional investors. And what it basically shows you is that institutional investors have basically been reducing their exposure to the market this whole year, while retail investors have been increasing their exposure. And you guys might say, oh, but that's a sign like the top is close and whatever. I would actually agree with that, but I still think we're going to go higher. But the key takeaway here being, guys, is that there's multiple indicators to suggest that institutional investors are not as involved in the markets right now as they were, for example, in previous years. So in this case, I would make the argument that the September effect might, like, either it's going to be muted or might not happen at all, for the simple reason that that institutional dynamic is not going to be at play, because those institutions are not involved, especially since April. They've all been out like saying like, look, like these tariffs are crazy. Like, I'm just going to stick to bonds or whatever, right? I'm going to stick to bonds and gold, and I'm going to be super safe here, and I'm going to minimize my exposure to other assets. And of course, the result of that could be that this September effect doesn't really affect the market, because institutions, again, they're not involved enough for there to be that kind of rebalancing dynamic, because most of them are still off sides. They're not really invested. Caveat being, of course, I'm sure if you guys watch other people like Brent Johnson, like these macro guys, they'll explain like, yes, there's these like CTA hedge funds that they are like max long and they've been following the trends. But the thing is that there's a difference between like hedge funds and then like all these other institutional players, right? There's many different categories of institutional players, and this is where things get super nuanced. But the key takeaway being, guys, is that based on what I've heard from listening to all these different macro analysts, institutions are still mostly on the sidelines. And if this September effect is caused by institutional portfolio rebalancing, then it's unlikely to have an effect if the institutions are not as involved as they were in previous years, if that makes any sense. And again, like tying in all the stuff around Bitcoin and crypto in general that I just mentioned with all the psychological effects there. But yeah, I know it's a little bit nuanced, a little bit complicated, but it's super fascinating. And I do think that I guess in sum, that both from a crypto perspective and a macro perspective, September could actually be a green month, and this is actually what I expect. And it also has to do with the catalysts that can happen in September, because what's really funny is when I say that markets are going to rally, whatever, everyone says, show me the catalyst, show me the catalyst. But now people are saying, well, there's going to be a September crash. Now it's your turn to show me the catalyst. You show me the catalyst, right? And you have to prove to us that that there's going to be another crash in September, especially after this chop and grind that we've seen in August, right? When you have that prolonged period of chop and grind, what follows after, just ebb and flow. It's up and down and up and down. We've now had prices going down. Is it going to be another brutal drawdown lower in September? Given all the dynamics I just mentioned here, I think that's not very likely. And again, we'll look into the catalysts in just a second. First, I do need to tell you guys about the Coin Bureau deals page. That's where you'll find the biggest trading fee discounts and bonuses on the top exchanges, whether it's Binance, 20% trading fee discount, $600 of bonuses, Bybit, $60,000 in rewards, Axiom, where you can trade meme coins on Solana, 10% cash back for life, plus points multiplier. I think they're going to be doing an airdrop at some point. Don't quote me on that. We have 10% discount on Aaron's Better Traders course here, 2-bit, 100,000 USDT welcome bonus up to that amount, with a 50% up to 50% discount for life. Whole bunch of different deals here, guys. Do check out the deals page. It's not just exchanges. We also have, as you noted, or I guess as I noted, as you saw, the Better Traders course and a whole bunch of other deals on like hardware wallets and tax tools and everything under the sun. But anyways, guys, moving on now to the catalyst. So I'm just going to go through 4 here just for the sake of time, because it's already kind of getting a little bit lengthy here, I think. So for the sake of time, I'll just take you through 4 catalysts that people have been saying the reason why there would be a crash in September. So the first one that I've heard, of course, is that there's going to be this Fed meeting in mid-September when Jerome basically cuts interest rates, or when he announces that they're cutting interest rates, that this will result in long-term yields rising, and that will be bearish for the markets, because that's kind of what happened last September when the Fed cut rates. But the thing that's quote unquote different this time, and this also actually comes from Lance Roberts here, basically, if you look at economic indicators, and as a fun fact, guys, I'm sure if you follow all these crypto analysts on X or whatever, they're all talking about how the crypto market's going to go higher in 2026. And their primary argument for that is because the ISM, which is basically measuring the economic strength, economic activity, whatever, because the ISM is showing that it's going to start, basically the ISM has been flat and it looks like it's going to start recovering. But the thing is that if you look at the ISM and you combine it with, I think it's the ISM services and the ISM manufacturing, if you combine the two and then you weigh it based on their allocate or like their significance or like proportion of the U.S. economy, you actually can see that the U.S. economy has basically been grinding sideways for a while. And actually, right now, over the last you could say like couple of months, it's actually looking really rough, and it looks like it's about to head into contraction territory. So this is the thing that's kind of different, and why I think Jerome was dovish last Friday was basically because he could see like, yeah, like the economy is actually not looking that good under the hood. And of course, a lot of people are saying, oh yeah, there's like, this, that, and the other, but most of the like spending on development is coming from like AI stuff from these tech companies. Everything outside of tech is basically struggling. And this is part of the reason why I believe actually later this year, the crypto market is likely going to crash in November, December. I'm going to be doing a video about that later. So, but I guess the TLDR there is that the economy does look like it's starting to contract, and we're probably going to be entering a serious slowdown later this year, early next year. And again, this is why I think Jerome is cutting, and why we're signaling a cut, and why on Friday, like logically, if the Federal Reserve cutting interest rates would have caused bond yields to rise, we would have seen that on Friday, but we didn't. We actually saw bond yields fall. This is something that was pointed out by Joseph Wang, another macro analyst who used to work at the Fed. We actually saw bond yields fall, and what that tells me is that basically the bond market can actually see the same thing Jerome is, and being like, yeah, like actually basically the economy in the U.S. is not looking as good as we think, so you do need to start cutting rates, and you're behind the curve again, right? And people are going to interpret, I'm sure, that first rate cut, everyone's going to interpret that as bullish and everything's going to rally. But then come late October, I think the Fed's going to be like, yeah, we have to start cutting like crazy because the economy's starting to fall apart, right? And then everything starts going down, whether it's gold or crypto or stocks or anything else, right? But anyways, that's just the Fed. That's just the Fed cutting part. Another catalyst here, of course, has to do with the tariffs. But as most of you guys will know, the tariffs, especially I think between China and Mexico, many of these like the biggest kind of like tariffs here have been delayed, I think, until November 9th, if memory serves, because there was recently a delay, I think, on August 11th. And if you do 90 days, it's like November 9th or something. But basically into early November, like we're not going to have we shouldn't be getting any more crazy like tariff news basically until early November. So the idea that something tariff related will pop up in September seems really unlikely. And then of course there's another one, which is something that I had flagged as well, which is the possibility that Israel could start basically attacking Iran again. This is where things get interesting and a little bit up for debate, and again, of course, very nuanced. But what I believe and what I've heard, like from different macro analysts, specifically from Doomberg, really awesome guy to follow, is that I don't think Israel is going to attack Iran until the war in Ukraine has ended. And if that is still kind of dragging on, then Israel is unlikely to attack Iran, because Israel basically needs the U.S.'s full attention to make sure that they can actually be fighting against Iran effectively. If that, just to keep it simple, I guess. There was like stories and rumors and whatever going around, which again, like, I'm not super deep into the weeds on this stuff, but there was like rumors that like they were running out of weapons because it had all been sent to Ukraine. As a fun fact, I think this is something I had predicted, I think last year, and I was kind of saying like, look, like everything is being sent. Like this idea that there's going to be more and more and more escalation just seems unlikely, because all the weapons are just being depleted and there's nothing left. So it's like you can't really have more escalation when everything's already been used up. And I guess according to various alternative media sources, there's a shortage of weapons to go around, so you can't have two wars going on, right, that the U.S. is supporting. It can only be one at a time. I think this is also part of why Trump has been trying to like push for this peace. Everyone's saying, oh, like look at Trump being friendly with Putin, whatever. I think it's potentially to try and help out Israel so that they can like do what they want, right? And again, just my personal opinion. Feel free to disagree in the comments. But point being is that show me the catalyst. Tell me why there's going to be a huge crash in September, because it's probably not going to be Fed rate cuts. It's probably not going to be related to tariffs, and it's probably not going to be related to some kind of geopolitical escalation, right? Whether it's some conflict in Iran, Israel, or even in Ukraine for that matter, because again, there just isn't enough weapons to like, amplify the conflict at some next level. So yeah, like there's, again, I don't see any obvious catalyst here that would cause a huge crash in September. And especially with everyone being super bearish going in September on the crypto side, institutional investors apparently being like, pretty absent from the markets, which basically potentially nullifies this whole September effect on the macro level. I don't think that September is going to be bearish, and I actually do think it's going to be very, very bullish for the market. Anyways, guys, if you did make it this far and you did find that information helpful, be sure to smash that like button, subscribe to the channel, ping the notification bell, and I'll see you in the next one.